In March of 2020, the S&P 500 dropped 34% in just 33 days. The 10 richest people in America lost $78 billion on paper. By August, they had made it all back, plus another $85 billion. This wasn't luck. It wasn't complicated. It was structural. If you understand what happened during those 5 months, you understand how the wealthiest people on the planet don't just survive recessions, they use them. Most people think protecting wealth during a downturn means selling everything and hiding in cash. That's not what happens at the top. The strategy is almost the opposite. Recessions don't destroy wealth, they relocate it. Let's rewind to 2008, the financial crisis. Lehman Brothers collapses, the housing market implodes, unemployment doubles. It's the worst economic disaster since the Great Depression. You'd expect billionaires to be getting obliterated, right? Some did on paper, temporarily. But within 18 months, the Forbes 400 list was worth more than before the crash. Not because the economy recovered for everyone. It didn't. Median household wealth wouldn't return to pre-crisis levels until 2016. But billionaire wealth came roaring back by 2010. The question isn't what happened, the question is how. And the answer isn't a secret, it's just not designed for you. Here's the first move. When a recession hits, billionaires don't pull out of the market, they borrow. Sounds insane, right? The economy's collapsing, asset prices are cratering, and the wealthiest people in the world are taking on more debt. But the logic is bulletproof. Imagine you're worth $5 billion. Most of that isn't in a checking account. It's tied up in stocks, real estate, private equity, assets. Now the market drops 30%. Your net worth is suddenly $3.5 billion. You need cash. Option 1, sell. But if you sell, you lock in losses. You convert assets that will recover into cash that won't. And you pay capital gains taxes, 15–20% gone instantly. Option 2, borrow against your assets. You go to a private bank, a wealth management firm, and take a loan using your stock or real estate as collateral. They'll lend up to 70% of the value. Interest rates? Low. Often under 3%. Why? You're not a risk, you're a billionaire. Now you have cash. You didn't sell, you didn't trigger a tax event. And when the market recovers, which it historically always does, your assets go back up. You pay back the loan with cheaper future dollars, and you still own everything. This is called securities-based lending. It's how the ultra-wealthy stay liquid without ever selling. But that's just defense. The real move is offense. When markets crash, everything gets cheaper. Not just stocks, real estate, distressed companies, entire industries. If you have cash when everyone else is panicking, you're not buying in a crisis, you're buying at a discount. In 2008, while foreclosures spiked, private equity firms and billionaire investors quietly bought tens of thousands of homes. Bought for 30 to 50 cents on the dollar. They didn't flip them, they rented them. When housing prices recovered, they either sold at a profit or kept cash-flowing assets. Blackstone bought 40,000 rental homes between 2012 and 2014. They spent $10 billion. Those properties are now worth multiples. Meanwhile, everyday families were underwater on mortgages, locked out of the market. This isn't illegal, it's math. Recessions create liquidity crunches. If you have liquidity, you have leverage. Leverage in a downturn is the closest thing to a cheat code. Billionaires don't just buy assets during recessions, they restructure how they hold them. Take the Dynasty Trust, a legal structure that transfers assets to heirs without triggering estate taxes, sometimes for hundreds of years. You put wealth into the trust, it grows tax-free. Your kids inherit without paying 40% estate tax. Their kids inherit, and so on. During a recession, asset values drop. That means more can be transferred at a lower valuation. When assets recover, all growth happens inside the trust, shielded from taxes. This is called a defective grantor trust. The IRS knows about it, it's legal, and it's one of the most efficient ways to move billions across generations while paying almost nothing. Timing matters, not during a boom, during a recession. The recession becomes the transfer event. Life insurance isn't just for families. At the billionaire level, it's a tax-free wealth storage vehicle. Private placement life insurance. Not normal, a custom investment wrapper that qualifies as life insurance under tax law. Fund it with millions or hundreds of millions. Invest inside, stocks, hedge funds, whatever. It grows tax-free. You can borrow against it tax-free. When you die, it pays out to heirs tax-free. During a recession, pour money in when asset prices are low. Everything grows without IRS interference. Completely legal, completely optimized. Meanwhile, the rest of the system is working for them. Central banks lower interest rates to stimulate the economy. For savers, it's pain. Savings accounts pay nothing, retirees on fixed income get crushed. For asset owners, it's rocket fuel. Low rates increase the present value of future cash flows. Stocks rise, real estate rises. This is why the stock market recovered so fast in 2020. The Fed dropped rates to zero, flooded the system with liquidity, and asset prices exploded. If you owned assets, you got richer. If you didn't, you fell further behind. The system isn't neutral, it rewards capital. If you live paycheck to paycheck, a recession means job loss, burning savings, going into debt. If you're a billionaire, your portfolio drops temporarily. You don't sell, you borrow, you buy distressed assets, you minimize taxes. When the recovery comes, you capture the upside. Predictable, reliable, repeatable. Between 2020 and 2021, U.S. billionaires added nearly $2 trillion. Meanwhile, tens of millions of Americans were unemployed, evicted, struggling to survive. It's not conspiracy, it's incentives. The tools that protect wealth, credit lines, tax optimization, liquidity, are only accessible at scale. Scale requires wealth you already have. The next recession is coming, always is. Triggered by inflation, debt, geopolitics, it doesn't matter. The pattern repeats. Billionaires borrow, not sell. They buy distressed assets at a discount, transfer wealth into tax-advantaged structures, and when the economy recovers, they're richer than before. Not smarter, not harder working. The system stabilizes capital, not people. Fairness? Subjective. But if recessions consistently redistribute wealth upward and recoveries accelerate the trend, we're not talking about economic cycles. We're talking about a mechanism. Mechanisms don't stop unless something breaks.
If this kind of breakdown is useful, this is exactly what the channel does. No hype, no shortcuts, just how the system actually works. Subscribing just means you won't miss the next one.